What's up, investors? It's the Russian dude, and let's right now briefly and very quickly talk about Binance and crypto situation. But first of all, right here is a very interesting advertisement I found on Russian internet where the guy is selling one of his crypto farms. Basically, he's saying that you can actually use this to heat your apartment and at the same time acquire some money. The cost of this thing is approximately to run this thing is approximately 20,000 rubles, which is like $2,000 per month, and it can actually bring you 25,000 rubles or $2,500 per month, which is like $500 per month profit. And at the same time, this will be working as a heater, which can heat approximately 200 square feet according to this advertisement. So he's basically saying this is a win-win situation. You buy it, you make some money, you don't pay for heating anymore, and you actually get heat in at least one room of your houses. But okay, so this was the small off topic. Now, okay, let's actually talk about crypto. First of all, the demand for Bitcoin after halving might increase 5 times by some experts. The reasons they give for this it is because as soon as halving happened, which basically means that the rewards for mining Bitcoin decreased in half, a lot of Bitcoin miners will actually leave this industry because it's not going to be longer profitable for them. Which basically means the supply of Bitcoin will reduce while demand, theoretically, let's call it like this, stays the same. So demand, let's call it like this right now, and then the supply is right here, and as soon as supply decreases, it means that there is more demand than supply, which basically means that price potentially can go up. And if you're a crypto investor, this headline that the demand is 5 times higher than the supply, this headline might sound extraordinarily good for you, but let's not forget the basic economics 101. As soon as demand exceeds the supply, then there are new people who are trying to fill in this gap in supply, which basically means that those Bitcoin miners which leave this industry will be eventually replaced by new people who will find alternative methods, cheaper ones, to extract Bitcoins because now there will be once again higher demand. And another not so great news from the crypto world is that the biggest crypto exchange, Binance, has seen a decrease in its Bitcoins trading volume outside of US. The decrease is from 81.3 to 55.3%, which is the decrease of 26% in less than a year. And since Bitcoin is one or maybe even the most traded asset on Binance or any other crypto exchange at this point, and crypto exchange, the way they make money is through the fees, this is a pretty big problem for Binance overall. But that's not the only thing. The Security and Exchange Commission in Philippines, or I mean the equivalent of this government facility, they decided to completely remove Binance from the smartphone app stores and Google Plays from the applications. So simply those people will not be able to use it on their phones. But okay, enough of crypto. Now let's talk about why the stock market might rebound soon. I'm not calling this a full recovery, this just might be a temporarily 1-2 months rebound. First of all, let's take a look at this graph which shows the prices for gold, which are decreasing, which in the last day alone fell by 2.8%. This is the biggest daily decrease in more than 2 years. And guess what? As soon as stock market stocks become not that interesting to investors, and as soon as they start looking for some safer alternatives, maybe not as profitable as stocks, but they start looking to ways to save their money. One of the ways they can do it is either fixed assets, fixed income securities, or they can go simply to commodities, such as for example right here is gold. But there is another thing, another major commodity, which is obviously oil, also saw this new correlation between call and put options, as you can see from this graph. And in very basic understanding what it means is that people are no longer seeing extreme price increase in the near future for oil as a commodity. They are kind of started to see that maybe the oil prices are somewhere near its top at this very moment. So the dominance of put options become a little bit more obvious, which basically means that people expect the price drop in oil. And one of the main reasons for this, it is because of geopolitics. And what I mean by that, if you've been watching my original The Russian Dude channel, Ukraine was attacking oil refineries of Russia a lot of times last several weeks, and now these attacks reduced significantly, then there was Israel versus Iran and it also kinda slowed down. So once again, geopolitical risks reduce, so the uncertainty reduces as well. And so as soon as this, let's call them like this, defensive, safe investments stop being attractive to investors, guess what they do? They start looking back towards regular classical investments, primarily in stocks. Some major investment houses, they do consider that this correction we are seeing right now is going a little bit faster than it should have been going. For this reason, there is a majority of companies which are being oversold, which basically means that their prices are dropping fast and significantly, which right now creates some relatively good opportunities in terms of risk-reward ratio. The downside going down for price is not that much more. Consider to be the downside is not that big, while the upside is getting bigger every single day. And in confirmation of this, they do mention that the percentage of companies which are still trading above their 20 days moving averages is only 8%. Since 1994 it was only 31 cases, similar ones, and only within 1 to 3 months the stock market was recovering relatively significantly, at least to pre-correction levels. And this, according to them, is what we're experiencing right now. So the funds start research, at least according to them, this is the conclusion they are making. We might see stocks rebounding very soon. But obviously there is no way to tell exactly when this process is gonna start. It can start literally today or at the end of the third month, or it might not even start at all. If I knew for sure, what stops me from selling everything and investing before it happens, right? So, but there is a sector which a lot of investors and a lot of financial professionals are considering to be the one which can profit from current situation, so let's talk about this right now. But so you have a better understanding, it is extremely important to mention other sectors which are struggling the most. And the very first one, which I have been already talking about in my previous videos, is the technological sector. Whenever there are high interest rates and the inflation is high, they are the ones struggling the most first of all. And we are still seeing the financial earnings reports of major companies just coming out right now as we speak. So if those companies, those trillion-dollar companies start falling as well, they are the ones responsible for a very big portion of the entire stock market in the US. So if they start falling, they can drag the market with them even further. You can even see this next graph, which shows the performance of just the technological sector in relation to the rest of the stock market, and you can see this gap is probably the biggest since 2009. There was no such big underperformance by this particular sector at this point for more than 15 years. But most likely it's not going to be over just yet. According to JP Morgan, they are expecting the correction to last even longer, because if you remember, Jerome Powell is not planning to reduce interest rates anytime soon. The inflation is not budging, it's still relatively high, above their target at least. So they are keeping the interest rates right now at their current levels, which are 5.33%, and they might even consider start increasing them once again, which is going to hurt the technological sector even more. And already at this point, even just the regular investors start to take into consideration this potential increase in interest rates and increase in inflation. So it almost feels like that there is not a single place where you can invest your money right now, because everything is just falling apart. But let me ask you a question. So, increase in interest rates. Who is actually going to benefit from it? Because there are winners and losers on the stock market, in the economy in general. So whenever there are losers, inevitably there must be winners. And to answer this question, the sector which will most likely benefit from existing situation and even an increase in interest rates is the financial sector. Even at this point, at the moment of recording this video, the financial sector is already outperforming the S&P 500. And one of the main reasons for this are the credits, loans, all this kind of stuff. Because as soon as the federal rate, which once again is 5.33%, whenever you, let's call it like this, go to a bank and you want to apply for a loan or a mortgage, the banks, they take this interest rate, 5.33%, and then they apply a couple more or even more percents on top. For example, to give you mortgage. So even though, let's call it like this, the interest rates are 5.33% right now, and the mortgage will cost you 7 to 8%. This additional 1-2% they put on top goes literally into their pockets. Whoa, so what happens when the interest rates are low? What happens when interest rates, let's say, also are 1%? In order for banks to be competitive, they obviously have to reduce their own rates as well. So now you go to take a mortgage and it will no longer be 7 to 8%. Now it will be 2 to 3%. So the amount of money they are receiving is way less. You might think this 5% is nothing, but don't forget this is mortgage. Some people do not even refinance their houses, they just lock in their mortgage rates because this is simply not what's being taught in schools, and they keep paying outrageously high numbers for an extended period of time, for years. And 5% of this increase, if let's say so, the mortgages are worth of billions of dollars, hundreds of billions of dollars, this might be extra $5 billion for bank's income every single year, just to say that it's just from mortgages alone. And just to give you some numbers from the financial sector, it has been reported that 15 out of 20 such companies, they did report an increase in revenue. 16 out of 20 companies, they beat their EPS expectations. And also 16 out of 20 companies, they outperformed the market much higher than even the brightest, the most optimistic expectations from the analysts. And if you take a look right now at some of financial companies' stock prices, you will be able to see that they're far below their all-time highs. And so once again, right now, the interest rates are not planning to be reduced anytime soon. There might even be an increase, which basically means that the banks, to say the least, and other financial companies, they will continue to enjoy the current conditions on the market for quite some time. I guess, guys, you now see what I'm talking about. It's not just my own assumptions. This is what financial experts are also thinking. I'm mainly relying on their opinion and then translating this complicated information, trying to make it as easily absorbed by you guys as possible. In no way any of this is a financial recommendation. Please always do your own research before investing your money. And as always, thank you so much for watching. Please subscribe to my channel if you found this information useful. Like this video as well. Don't forget that these videos will start now, come out every single day. And so yeah, see you tomorrow.